let's go get started. So this is insurance and safety tips for party equipment rental businesses. This is regardless of where you are in the country, but let's go and get started. So just some information. The company that I represent is the Cossio Insurance Agency. We're actually owned by Brown and Brown Insurance now. So we used to be family-owned company for 20 plus years. So in 2019, we're actually acquired by Brown and Brown, but all the same information, all the contact information is there if you need it. If you wanted to just check out the websites or if you wanted to apply online, this is all the information here. Again, this is all recorded, so you guys should be able to access this at some point later on. And that is my ugly mug. So this is me. Started at the CIA, just doing the everyday things that you would expect the kids in a family-owned business to do. Basically been doing this for my entire life. Started out with paintball and airsoft fields just because that was a natural fit for me. Been playing paintball since I was 5 years old, so it was just kind of a natural fit to get into some of these weekend warrior type of insurance risks. But I've been a licensed insurance agent since 2012. It's crazy to believe. I'm 31 years old and been a licensed agent for 10 of them. So not a spring chicken. I've been doing this for a long time. But I got my degree from the University of South Carolina. Insurance and risk management and also marketing, with the intent of going back and helping out the family business. So um, worked there for about 3.5 years, and then I went and worked for an accident insurance carrier for another 3.5 years. And then in September of 2020, my dad said he was going to be retiring, so came back to run the business. So here we are, back for round two. And this is just a brief overview of what we're going to review today. Just number one, just some simple practices you guys could do to lower your risk. There's no such thing as getting it to zero, but there's a lot of things you can do just as like a repetitive process that are going to help you guys lower the chances for a claim. Also getting into some causes of incidents. Some of them may surprise you. Some of them are very, very much common sense driven. And then number three, which insurance policies you should have and why. Everybody always asks what they need to get started, but they may not ask the next question of, what should I have? And then number four, just getting through, again, some frequently asked questions about, insurance related or why certain things are the way that they are. We get them a lot this time of year as people try to plan out their businesses or they're trying to figure out ways that they can improve their businesses. So just to get started on this one, we always start with training. That is easily the easiest way for you to lower your exposure. So training your employees on every single unit that you have, or at the very minimum, just the different types of units that you have. The protocol, at least the ways you would set up a slide, are going to be different than they are for a regular bounce house. Same or different for a slip and slide versus a dry slide. There's a lot of things that are going to be varying. So you need to make sure that your employees are trained on every single unit, and also that it's documented that they've been trained on it. So some people do that through a video, and then they have to essentially initial or sign off on it saying that they understand. And this needs to be done for, not only your employees, but also for your customers. So if you guys have multiple types of units, your rental agreement is going to have rules in there, but let's say you started out with 2 bounce houses, but then as you guys progress through the life of your business, you've added combo units, you've added water slides, you have Zorb balls, maybe you have tables and chairs that you offer now, concessions equipment. You need to make sure that those rules are clearly stated on your rental agreement, and they need to apply to the items that you are renting. So again, just have them signed off on them. You can have them initial it, sign off on it. Obviously, signatures are best, but anywhere you have a customer sign, you also need to make sure that they're initialing or printing their name. So that kind of leads me to my next one here, which is following the safety guidelines every single time. Can't state this enough. If you guys are just winging it and you're coming up with your own rules on how to operate the equipment, it's very easy for somebody to say that you were operating that equipment incorrectly. So make sure you're following those guidelines. They should be in your user manual, or they should be on the side of the unit. A lot of times they may say, you can have up to X number of kids, or, a kid needs to be at least this tall to get on here, or there's a maximum for how many people or what the size that person should be using the equipment. So just refer to that. It should be on the label or within your user manual. Having the correct hold harmless wording in your rental agreements and your contract. So what I mean by that is that's your waiver, right? So you need to make sure that you have a hold harmless clause within your waiver. You know, as your insurance agent, we're going to comb through your rental contract and make sure that it's in there, but we're not attorneys. So, we'll let you know that, hey, this is going to meet what the insurance company is looking for, but you need to make sure that you're going and taking it to an attorney in your state. Every state is different. So you need to make sure that they're having that finalized by a professional. And then obviously, most importantly, make sure that it's signed every single rental. I have a side note here that you can get rental booking software. So whether it's event rental systems, if it's inflatable office or bouncy castle network, get the software because it's going to eliminate the human error. There's a claim I'm dealing with right now in Florida where, the rental company, she got really busy. I think her computer was malfunctioning that day, so she just went to the event. She set it up. Didn't have the renter sign the contract, and lo and behold, there was an injury. And so because she doesn't have a signed rental contract, she doesn't have a signed waiver. So if this goes to court, it's going to be a very easy open and shut case of basically how much money do you want. So you don't want to get into that type of situation, especially if you're in states like Florida, if you're in New York, New Jersey, California. Those types of states are notorious for these types of lawsuits being filed. And if you don't have a signed rental agreement, it's going to be very, very difficult for the insurance companies to defend you. Next one here is to take pictures before and after your setups. I cannot state this enough. A picture will say 1,000 words. If you get into a he said, she said with somebody about, the date that the event even happened, the great thing about technology these days on your phone even is that it's timestamped. So you can show exactly what the unit looked like when you set it up and left. And then when you came back to pick up the equipment, what was the condition that it was in? Was it moved? That's been a very common claim that happens, especially if you guys are setting up near swimming pools. The renter gets the bright idea that they're going to make that water slide into a water slide into the pool. And obviously that is a lot riskier as far as a setup is concerned. Kids can hit their heads on the side of the pool. They can drown, obviously. There's so many things that could go wrong with that. So you want to make sure that if you're having your guys or your setup team, just make sure that they're taking pictures up before and after the setups. It's great for the after part as well, because if there was any damage to the equipment, you'll have a timestamp documentation showing of exactly when you went to pick up the equipment and the condition that it was in. So just keep that in mind. A lot of times that will save some people if they're trying to go back and enforce their contract with the renters and say, hey, look, you were responsible for any damage to this equipment. Here's where I set it up. Here's where I went to pick it up. And you could see where the visible damage has been made. Obviously, this was on your rental, so you're going to be responsible for it. So just do yourself a favor, especially if you guys are going to be setting up at anything that is not a backyard birthday party. And by that, I mean a corporate event, if it's a church event, maybe a public street fair where you're charging $5 for 10 minutes of bounce time, where you're kind of giving them a wristband. You really want to make sure that you guys are taking pictures of those setups as well, especially because you're going to want to see if you're setting up on concrete, if you have the correct number of bags set up or sandbags. You want to really show that you went through all the necessary steps to make sure that equipment was set up correctly. And also even further is that you want to make sure you take a picture of the safety rules and also the hold harmless wording. We call it the pay for play signage or the waiver signage. All that is just the portion, that hold harmless wording from your agreement that's put onto, a sign. It could be an A-frame sign, very simple. Just want to make sure you have the basic rules, and then also letting the people know that if they get on the equipment, they're holding you harmless for any type of injuries that may occur. So, it's very simple, guys. You don't have to do anything fancy, just a simple A-frame sign, put the rules on either side of it, along with that hold harmless waiver, and just take it with you to any of those public events. And then the last thing here, for some reason in 2021, I saw a lot more of these types of incidents or claims coming in that had to do with either utility or sprinkler lines. So if you guys are setting up, make sure that is part of your rental contract that you're going to have the renter clearly identify or mark any of those utility or sprinkler lines. If you drive a stake through it, you're the one that's driving the stake through. Even if they told you where to set it up, you are going to be the one that's responsible for it. Especially if they haven't signed the contract yet. So just keep that in mind. Until you have that signed contract, I wouldn't do anything. I would definitely make sure that the renters are marking it, or you can call your city and have them confirm where those lines are going to be, especially if you guys are going to be setting up at, say, a park or some other type of public venue. All right, so this leads me to the next one, devices with the most claims. This isn't in any particular order, but just wanted to highlight some of the items that usually have either more severity, which is just the amount that the claim is paid, or just frequency, which is just the number of times you see claims happen on that particular device. So that's really how they look at risk, is either severity or frequency. With Joust, it's pretty obvious. They're honestly trying to hit each other. Usually it happens when maybe the pad comes off the end of the pole, so they get hit with either like straight wood or straight plastic or metal, whatever the joust is made out of. Also, you're getting hit in the head, so there's always a higher chance for a type of a head injury. So those ones are pretty straightforward. The knocker ball, if you've seen any of the videos of those things, people very rarely use them as intended. They were supposed to be used as a way to make bubble soccer, right? That was what it was known as. But what ended up happening was you see all the videos. I think one of them was pretty popular with the Panthers. Cam Newton was on the team at the time, and they're just out there beating the heck out of each other. They're just ramming each other. They're flying 15, 20 feet. You can see that, if somebody were to hit, head to head, basically, there wasn't enough distance between the top of their head and the top of that ball. You can have two people running full speed, colliding head to head. Had some serious claims that were paid out just because of that kind of stuff. So it's not like you can't get insurance for it, but just keep in mind that it's definitely going to be a lot more expensive than you might have thought it was. Sumo suits kind of hand in hand with joust. You're basically trying to tackle somebody so they could fall wrong. That's pretty common there. With slides, whether it's a wet slide or a dry slide, a lot of it just comes down to how you're operating it. And I have a pretty good video of what I was going to show you guys. What ends up happening, especially if you have, say, 5 or 6 kids on that particular unit, and the kid at the top falls down, all the people that are behind them are going to get either knocked out. They could, have their ankle broken. Just the dog pile. Anytime you have a bunch of people colliding into each other, just a higher likelihood for a claim to occur. Mechanical bulls, all the ones that I've seen that were really bad usually had to do with alcohol being involved. The thing with mechanical bulls is that they are 100% at the mercy of your operator. So if your operator does something to try to throw them off, or they allow for more than one person to get on the bull at the time, happens a lot if you go to like a college bar or a type of college event. You have college girls and they're talking trash to the operator. They want to get them to try to throw them off and make it a fun ride. What happens? They end up falling on top of each other, or they get slung off of the thing and they end up, dislocating their shoulder, breaking a collarbone. That kind of stuff happens pretty commonly on mechanical bulls, and it's almost because it's somebody who's probably, haven't done anything athletic in a few years, and they get a few beers in them, and then they want to try. So just keep that in mind. Again, not like you can't get insurance for a mechanical bull. Just going to be a little bit more expensive. And trackless trains, believe it or not, I think like this has been somewhat eradicated from the industry, but you still see a lot of the barrel trains where people convert, those big 55-gallon drums into a trackless train. Those are very, very difficult, if not almost impossible to insure. So just make sure you guys are buying a trackless train from a reputable manufacturer that was intended to be used as a trackless train, not something that was retrofitted from something that wasn't designed to be used that way. And so this video, hopefully you guys can see it. Hopefully the volume's not going to blow your ears out either. So fair warning on that one. I'm just going to go ahead and play it for you. All right. So you see what happens when you have a lot of people on the unit at one time. That was actually the mother of the party that fell down and took out all the kids underneath her. And so it's important, this video is a very, very good depiction of what the worst case scenario is. And it also draws attention to how policies are written. So for those that have, E&S carriers, that stands for excess and surplus lines. A lot of the amusement industry has gone to those type of insurance carriers in a way that they have kind of built in a protection for themselves, is that they do what's called a per claim deductible. So that one, we call that an occurrence, right? So one woman fell down, she basically injured 5 or 6 kids. In an admitted market, that's just treated as a per occurrence, and there's a per occurrence deductible. But in reality, if you have an E&S carrier, they're going to charge you a per claim deductible. So that means that each person that puts in a claim, you have to pay that deductible. And usually it's $1,000. So, keep in mind, if that's one occurrence with 5 or 6 people filing a claim, that could be $5,000 in just deductibles that you have to pay. So just keep that in mind when you guys are looking at your insurance policies. It's definitely a good question to ask. What is the deductible? Is it a per occurrence deductible or is it a per claim deductible? Because just that one example can show you how big of a difference it can make. So other things that draw a lot of more claims, biggest thing with slides, you can even see the top 2 examples, is when adults place their children in their laps, or they put them next to them to go down these slides. So, if the kid is not big enough or they're not brave enough to go down a slide by themselves, do not allow the adults to put them in their laps or put them next to them and slide down together. You can kind of see what happens with the child here on the upper right-hand corner. Leg kind of gets out to the side, right? And what happens is their foot gets stuck between that side and the sliding surface, and the weight of the adult is actually what breaks their kid's leg or their ankle. I've seen elbows, arms. All it takes is that to get stuck that right way, and just the weight of the adult will break it. So, just keep that in mind. That's something that's definitely preventable. A lot of it just has to do with supervising the unit and making sure that the renters understand that that's not acceptable and it could lead to an injury. The bottom left photo, you see there's a bunch of kids playing on an obstacle course. It's pretty common that the kids, they get up to the top of it, they want to play, they're just holding on to the ropes. Obviously it's a lot more of likeliness that the kids can fall on top of each other. They could we see a lot of like knocked out teeth, a lot of kids that bump their heads together, they have to go get stitches. Very, very preventable claims. You just want to make sure that the rules are very clear that, hey, you got to get through the obstacle, get to the next obstacle. There's no hanging out at the top of it. And make sure that your renters know that that is the rule to get them through with the least amount of exposure. And then the bottom right one, that's just a good picture example of that video we just saw. You guys got to make sure that you're controlling the climbing areas. That is a recipe for disaster if the kid at the top falls down and then you have 5 or 6 kids behind them that actually end up getting injured as well. So just make sure it's a 1 up, 1 down rule. Make sure that they're waiting off of the unit, not while they're standing on the unit. Again, just ways you can enforce the rules to make it a little bit easier on you in the long run. So insurance policies that I need, I tried to separate this into a couple different sections. Everybody asks, what do you need to get started? So the ones on the left here, the 2 green ones, those are the bare bones minimum just to kind of get your business off the ground. So general liability, that's the main one. That's there if you were to get sued. So either for bodily injury or for property damage to someone else's property. So, using those 2 examples, if somebody, you didn't set up the bounce house correctly and it flies away with 5 kids in it, one of them gets injured, they're going to sue you for that. That's going to be a general liability claim. Same thing if you drove the stake through somebody's sprinkler line, because it's not only bodily injury, it also covers property damage. So that would also be something covered by the general liability. Ideally, if there's any type of a minor injury where, they basically just bumped heads, they need to go get stitches. I would say anything short of somebody getting paralyzed, you honestly really want to be proactive with the participant accident policy to try to get in front of it. Most of these policies are going to have it's a $25,000 limit for the out-of-pocket medical expenses. So us being here in, February, a lot of people, they just had their health insurance plans reset, right? So they haven't met their deductible for the year. So any of those out-of-pocket costs by any of the claimants, right? So they haven't met their deductible yet. Maybe they have a copay. Maybe their insurance only covers 80% of a claim. So that 20%, that out of pocket that claimant may have, is going to be covered under your accident policy. So the whole point being that if there's an injury, you say, I'm so sorry, I didn't think that we did anything wrong. And they may say that it wasn't your fault anyway. It just, it was an accident. 2 kids, in a bounce house, one fell on top of the other, and that's how they got injured. At that point, you can offer to pay for their medical bills, and it's going to make you guys look great as a business owner because you're not trying to hide behind your waiver. but it also just makes them whole again because you're reimbursing them. It's not like it's a checkbook that gets opened up and say, here's $5,000 to go away. It's solely a reimbursement product. So they have to go to the doctor. They have to prove that they have these medical bills, and those bills will show you what the balance is. So it's not like they're coming out ahead in any way. It might be a $10,000 medical visit, but maybe their insurance covers $8,000, and so your policy is only going to pay $2,000. So that's how the policies work. Again, if you guys have any specific questions about the accident coverage, very happy to walk through that. Again, I worked for an accident carrier for 3.5 years. I'm very, very well versed in it. So I'm happy to help you guys if you have those questions. Again, the reason why you want the accident coverage is because the general liability policy is going to exclude medical payments. So the only way for somebody to collect under the general liability policy is to file a lawsuit, which we don't want. We want to avoid those as much as possible, just because the insurance market is very, very hard and tightening right now for anybody that has claims. So the first one I have here in the orange circles here, this is a modern 21st century here. You need to be on the internet. You need to be processing credit cards. So that's one of the reasons I highly, highly recommend that you have cyber liability insurance. It's something that you don't think you will ever need, but if something does happen, if you either get ransomwared, maybe somebody sends you an email saying, hey, this is the school district, you need to wire us $500 to hold your spot as a preferred vendor. Turns out it was a scam. That is something that you could get a claim filed under a cyber liability policy, and hopefully claw that money back before it goes too long without being in your bank account. Cyber liability, again, I slightly touched on the ransomware, but our business was actually ransomware in 2019, and it shut us down for, I believe, 3 weeks, and they wanted $200,000 to be paid in Bitcoin. So unless you guys have that kind of money laying around or you have Bitcoin like that, it's definitely a fantastic policy to have in place. Luckily we had it, so the insurance carrier handled the claim from A to Z. Think about what you guys would do if somebody were to hack your system and just hold it ransom. Who would you call? You don't have anybody that's going to be able to take care of that for you, whereas the insurance company handles the whole thing. So just keep that in mind as well. Next one on here, if you guys own any vehicles in the company name. So it's a very, very clear distinction there. If the vehicles are owned in the company name, you definitely want to make sure that you have the commercial auto coverage. Is not super expensive, but it's definitely the correct way to make sure that your auto liability is covered. Most personal auto insurance policies exclude the use for any type of commercial use, and usually commercial use involves the pickup and delivery of equipment. So a lot of people, they think, oh, well, my personal policy, I have business use included. You need to make sure you're getting it in writing that your agent understands that you're doing commercial pickups and deliveries, because usually the definition of business use is like going to the bank or going to the post office, something that's very low risk, but it's just like an errand basically that you're doing for the business, not actually setting up and delivering the equipment. So just keep that in mind as well. The inland marine coverage, that is going to be the property coverage on your equipment. It has a really weird name, but that's essentially what it is, just property coverage. And the good thing about inland marine is it doesn't have to be at your location. So wherever you have it stored. It is covered also while it's in storage, but also inland marine is going to give you coverage while it's in transit, while it's set up at the event. There's just a little bit more bells and whistles to it. Obviously their understanding is that you're taking party rental equipment from place to place. So that's the policy you want to make sure that you have. If you have a loan on any of your equipment, it may be a requirement to have inland marine coverage on that equipment because the bank or the finance company has an insurable interest in your equipment until it's paid off. Workers' compensation, I have it on here as like an orange one. It really doesn't necessarily apply until you have employees. Some states require that you have workers' compensation based on how many employees you have or based on your payroll. You can either include or exclude yourself as a business owner. That's up to you. I've seen it kind of done both ways, but that is an option that you can cover yourself under the workers' compensation plan as well. Travel accident policy, it's really good if you guys are doing a lot of business travel. Obviously, with this industry, you're going to be doing a lot of driving. So, if you guys don't have any type of employee benefits plan, this is a very easy way to put something in place for your employees. Doesn't even have to be a full-time employee. It could be a part-time person. Could be a 1099 subcontractor. Basically anybody that is not eligible under a workers' compensation plan. This is a really good supplement. So just something to think about for the future if you guys are thinking about adding in benefits to your business. EPLI, that's Employment Practices Liability Insurance. Again, kind of comes down to having employees, really deals a lot with the workplace environment. So it could be a sexual harassment claim, could be that somebody feels that you wrongly terminated them or you did not hire them, which is another odd one to be sued for. Could be that you didn't promote somebody. They feel like you're discriminating them in some way. That's the policy that's going to reply or respond to that type of an incident. The sexual abuse and molestation coverage, again, nobody really likes to talk about it. They don't think they need it. But if you have employees, you can lose your business because one of your employees gets accused of, touching somebody inappropriately, and you have to defend, as the business owner, you have to defend the business against that claim. If you do not have sexual abuse and molestation coverage, you are paying for that defense out of your own pocket. So highly recommend it, especially if you guys supply any staff at your events or you allow for your customers to pay for, $20 an hour or $50 an hour, whatever the case may be, and you're supplying an attendant with it. I would highly recommend looking into the sexual abuse and molestation coverage just as a catch-all. It's unfortunate. We've seen another business owner in Florida lost his business just because one of his employees was a creeper. So just keep that in mind. Again, there's lots of policies out there for all these kinds of what if situations, but if you guys have employees or you staff your equipment, highly recommend looking into it. And the last one I have on here is for hired non-owned auto liability. This is kind of a gap filler coverage. If, let's just say, using the example before where you don't have vehicles that are owned in the business name, right? You guys are using, let's say you have an LLC formed, but you're using a vehicle that you own personally, but you're an owner in the LLC. While you're driving that vehicle for business use, and let's say you get to a car accident, the other person gets out of the car, they see your company magnet or your decal on the side of the truck, and they say, oh, this guy's a business owner, he must be a millionaire. And all of a sudden their neck starts hurting. They're like, they'll have like a bunch of long-term effects from it. So not only do they sue you personally, but they also sue the business because they saw your information on the side of the vehicle. Without hired non-owned auto coverage, you do not have liability coverage for the business while they're using that personal vehicle in the business name. So a really thing that I guess the nitty gritty of the coverage is that it does not cover the physical damage to the vehicle. It only covers for the defense cost, right? So defending the business in that lawsuit, that's something that if you don't have that coverage, you're paying for that out of your own pocket. So highly recommend it. Usually it's like a flat charge of $500 if you were just added on to the general liability. That's regardless of how many vehicles there may be. But just as soon as you get vehicles that are owned in the company name, switch to a commercial auto policy and you can add the hired non-owned auto to that policy. And usually it's much smaller amount because you're paying for the full-blown commercial auto policy that's going to cover, the physical damage, uninsured motorist, all that good stuff. So just look into it. If you guys are coming up for your renewal and you guys have vehicles that are not owned by the LLC, but you want to make sure that the LLC is covered, throw it on there. Like I said, it's a $500 flat charge. It's not going to break the bank. But in my opinion, I think that it's way more likely that you guys are going to get into a car accident than there is any type of a liability issue where you don't set up the equipment properly, and that's what actually leads to an injury. So another one that people often overlook, but it is there. It's available if you guys want it. So leads me into the frequently asked questions. This is just like the top 3 that I've been seeing so far, but I'll get into a few more. First one on here, why does my insurance keep going up even though I myself or my business has not had any claims? What we're going through right now is called a hardening of the market. So that just means that there's fewer carriers or markets that are available to insure this type of business. For those that have been around for a while, you've probably seen over the last 10 years, there's probably been 5 or 6 different carriers that completely exited the market due to claims volatility. Usually if there's an injury in this industry, it's going to be very significant, especially if it's a lawsuit. You got a kid that gets paralyzed or an adult that gets paralyzed. Those ones are going to be policy limits, looking at $1 million or more to be paid out. So, think about most of the insurance policies that are out there. I think, you know, the minimum premiums are anywhere between $2,000 to $3,500 for the year. Used to be that the minimum was $5,000, but as more carriers came to the market, you know, the price competition started driving that premium down, down, down. Then it bottomed out to the point where there wasn't enough premium there to cover the claims, so they get out of the market altogether. So I know it sounds weird, I know it sounds bad, but it's almost like you want to pay more for your insurance, because that means that more insurance companies are going to want to come to the table and then start competing again on price. So it's a cyclical market. It happens probably every 5 to 7 years that you go through what's called a soft market, where there's more players available, versus a hard market where there's just fewer players available. Just keep that in mind. You know, it's not like your insurance broker is trying to pull one over on you. They're not trying to just, you know, milk every dollar out of you. That's, you know, we're insurance agents. We're basically the middlemen or the intermediaries. We don't determine what those prices are going to be. We just go out there and try to find the best possible one for you. And then pooling, you know, everybody's impacted by claims. Usually, because insurance is not like a federally regulated type of product, it goes state by state. So if you had a bunch of insurance claims that were paid in Florida, usually the Florida rates are going to increase across the board, whether you had a claim or not. But just based on the fact that you're in Florida, you just pay a higher amount now. And uh, there's a bunch of carriers that just don't write in South Florida, just because there's a lot of claims down there. Florida's really bad. New York, New Jersey, see a lot of carriers that just refuse to write there, or if they do, they charge their pound of flesh in order to do so. So again, it's not anything that you're doing wrong. It just could be the fact that the rates are going up, or the minimum premiums are going up, and that's what's causing the, you know, to you as the end consumer to be paying more. Second one here, the accident claim. You know, if I file an accident claim, am I admitting guilt? And is that going to make my general liability more expensive? The answer is no, you are not admitting guilt, and no, you are not causing your liability coverage to be more expensive. It's completely standalone. You know, the accident policy is solely paid out on no fault basis. Doesn't matter whose fault it was. It could be the renter's fault, or it could have been that your employee didn't set up the equipment correctly. It doesn't matter. It gets paid out regardless. They just have to prove that they went to the doctor and they have some sort of an out-of-pocket medical expense. You know, do not be afraid to file an accident claim. If anything, you want to file a bunch of accident claims and no liability claims whatsoever. You know, the difference between an accident claim and a liability, just to give you guys some context, I think the average liability claim that we see usually pays out around $50,000, whereas an accident claim is going to be probably somewhere between $2,000 and $3,000 as an average. So it's a much big difference. Can you imagine what it is? It's the lawyers and the investigation that goes into it. So, you know, with a liability claim, again, they have to prove that you were negligent. So you're going to have attorneys on both sides racking up expenses. You know, they have to maybe hire an expert witness. I mean, there's a lot of expenses that go into a liability claim, and it counts against you even before it closes the claim out. So let's just say there's an injury. The insurance company thinks that, man, this could be really bad. We're going to set a reserve, which is what they think that claim is going to get paid out at. We're going to set this reserve at $100,000, and you know, that's going to really impact you if you're about to have an insurance renewal, because they're going to look at that and say, oh, this guy has an open claim on his record right now, and they're thinking it might settle at $100,000. We don't want to take a risk on this guy, or if they do, they're going to charge you a lot more to insure you. So any and all types of injuries like that, you want to always try to be proactive with the accident claim first. If they deny it and they go straight to suing you, you know, so be it. But at the very least, offer it to them, so that way there's a step down. You're trying to de-escalate the situation. You know, a lot of people feel that if you try to walk them through the claims process versus just stonewalling them and saying, oh, you signed a waiver, you're on your own, then they're going to really feel like, hey, this guy's a jerk. I'm going to go ahead and go get a lawyer, and we're going to sue him for everything he's worth now. So just try to do what you can, you know, especially if it involves a minor. You really want to make sure that you're trying to talk to the parents and say, hey, you know, did you go to the doctor? Is there any type of out of pocket? I would love to help you. Again, you're just trying to do as much as you can to prevent a lawsuit. And, you know, the fact that it is a standalone policy, it's going to have its own loss history. So, you know, yes, your accident insurance may go up, but the impact is going to be much less on the accident increase than it is on the liability side. And there's a bunch of accident carriers out there, not a whole lot of liability carriers left. And then this last one on here, you know, touched on this one on the last slide about the non-owned vehicles. Do you need commercial auto? If you're set up as a sole proprietorship, you can actually set up that vehicle as business and personal use. But if you're an LLC, at the very minimum, you need to make sure that you guys are getting that higher non-owned auto liability. It's definitely going to be worth the $500. God forbid you get into a car accident and they sue you for it. So just these are kind of like the main ones that comes up. Another one that's recent here that's definitely been more prevalent has been audits. So if you were to, let's say, you applied for your insurance January of 2021, and you're just starting out, didn't really know what to expect, so you projected $15,000 in a 12-month period. Turns out you are a much better business owner and marketer than you thought you were, and you ended up having a $75,000 year. Projected 15,000, but you ended up at 75,000. The insurance companies, it used to be in the past that these were non-auditable policies, meaning that they just took you at your word for that $15,000 projection, and they didn't ask any questions after it expired. As you can imagine, a lot of people were taking advantage of that and being dishonest about what their true performance was. So in order to essentially combat the dishonesty, now all these policies are going to be audited, which means that they're going to want to know what your actual sales were for that particular policy period. So if you projected 15 at the beginning, at the end of your 12-month term, you actually did 75. After your policy expires, and this is a big thing, after the policy expires, they're going to come back to you and say, hey, we looked at the books here. Looks like we quoted you on 15, but you actually did 75. We're going to charge you for that $60,000 in sales that the insurance company did not get paid for. So you're going to end up having to pay that audit premium in addition to paying for the renewal premium. So what you guys can do, I mean, that's a big chunk of money. A lot of people are paying like 2-3 times more than what they initially projected. So what you guys can do is you go throughout the year, you can actually increase your projected sales midterm. You don't have to wait until the end for the audit to happen. You could say, hey, we projected 15. We're halfway through the policy period. We're already at 45. We're doing really well. Let's go ahead and increase our projection to 65 or 70. So that way you do it when you have the cash flow, because you're already in the middle of your season, and you're increasing your projections then versus waiting until the very end and you have that big lump sum to pay. It's going to be a shock for some of the people that have not had an auditable policy. This is probably one of the first years you're going to see it as kind of par for the course. So just be prepared for it. For those of you that have the rental software, this process is going to be much, much easier for you. It's very easy to go into your dashboard and run a sales report for those dates that your policy actually ran. So another reason for you guys to get rental software. I don't care which one you guys get, just make sure that you have it, because it will make the whole audit process much, much easier for you in the long run. Any questions? I'll go ahead and open it up here. Hopefully I didn't talk you guys' ear off. Happy to answer any questions as you guys have them.
Sure, we'll go with this one first, just because you're on the topic right now. Milo asked, what if you overproject?
So depending on the carrier that you're with, another good question to ask your agent is you want to know if the policy is set up as minimum and deposit. If you're set up as minimum and deposit, that means that whatever it is that you paid initially, that's just the deposit. You're not going to get anything back after that. So what I would recommend is, if you're just starting out, to come up with a best case and a worst case scenario as far as your projected sales. And by that, I mean, what happens if you rent out the equipment every single weekend, every unit goes out every weekend? That's your best case scenario, right? But then also come up with a worst case scenario. Like, what if you have a rainy season, or a really rainy season, probably just outside the norm, you're not able to operate like you thought you were. Also keep in mind the weather that you guys get. If your operating season in New York is only 4 months, your projections should reflect that. Don't put it as a 12-month period that you're going to rent every month if you're only really operating for 4 months in that 12-month period. It's very easy to increase your sales as you go and pay more to the insurance company than it is to try to get money back from the insurance company at the end of the year because you didn't do as well. So just hopefully that answers your question, but try to be more conservative on your initial projection and increase it as you go. After you've been in business for 2 or 3 years, that should be pretty common practice. You guys should know, hey, on average, we're growing by like 10, 15% every year. And that should make your projections at the renewal a little bit easier.
Awesome. Yeah, that makes sense. It's always easier than trying to get the money back. Okay, I don't necessarily, you don't have to speak on this if you don't want to, Alex, because they might be a competitor, but Daniel asked, what are your thoughts about Next? I have seen it come across my desk in another industry at work. I don't know if it's another insurance company or if it's a NEXT.
Yep, it's an insurance company. It's to be honest with you, I'm very impressed with what they're doing. The issue is that they don't insure amusement devices. So if you have bounce houses or any type of bungee trampolines, anything that's considered an amusement device, they won't insure it. So
Got
if you're
it.
just
So
doing,
if you're tables and chairs strictly, maybe. Okay.
Yeah, that might be an option for you.
Okay.
That's something to keep in mind, is just make sure you read the fine print. Usually because it is an online platform, you're not dealing with an insurance agent. So that's part of the reason why it's so cheap, right? They're kind of cutting out the professional there. I believe you can call in, you can maybe even chat with somebody, but you kind of get what you pay for. So just keep that in mind. It's very convenient. It's an all online platform. Is just, if you have questions, this might not be the best fit for you. But if you don't have any amusement devices, I would say that's definitely one I would look into.
Cool. All right. Kadena wondering about how much they cost for a new business. So I know that's a very difficult one to answer, but I mean, if it's a small company, less than a dozen inflatables, first year in business, what is good insurance going to start at or be around?
Okay. Yeah. So I would say that at a minimum, I would budget for at least $2,000 a year for general liability and accident coverage. That's assuming that you get into a preferred market, but let's say you don't. Let's say you have some of those open front wedding bouncers that are just a little bit riskier, not only just by design, but also the fact that they're set up at weddings and there's a lot of alcohol at weddings. I would project, if you have any of those open front or any like those riskier items, I would say to ballpark that floor to start somewhere around $3,500 a year. So it really does help you out if you guys are just starting out your businesses, to do some research on the equipment that you want. Have an inventory list together, whether you have it or not, because everything with your insurance is on your projections for the next 12 months. So if you plan to add more equipment, or, hey, this is what I'm looking to add to my offering in the next 12 months, within your policy period, you want to make sure that you're letting your agent know your plans on the front side, because there may be one unit that's fine when you start out, but then you go, say you try to add a mechanical bull, but your insurance company does not cover mechanical bulls. If you go out and buy it, you don't tell your agent until after the fact, then you're basically stuck with a unit that you're either going to have to pay a lot of money to insure, or you can't afford to insure it. So just anytime you're buying new equipment, definitely reach out to your agent prior to buying it. It'll make your life much easier, and hopefully avoid you from getting stuck with a unit that you can't rent out.
Perfect. So I'm going to take 2 more questions from the Facebook audience, and then Brett, Mr. Begley, our owner, is on with us, and he's got a bunch of great questions too. This actually piggybacks good off what you just said. You're buying a unit, your insurance says it will be insurable, you receive it and it's not as described. What should the customer do?
I would send it back to whoever sent it to you if it wasn't as described.
Gotcha.
That would be my recommendation. The insurance is pretty wide open. There's not a whole lot that they're not going to cover. It has to be something that's, it's not made from commercial materials, or it's it's a knockoff. A lot of times the insurance companies don't want you to get sued because you have something that's licensed that you don't have a license for. They don't want to get dragged into a lawsuit with Disney, for example, because you're using knockoff equipment. So don't do that kind of stuff. You really want to make sure that you're buying good equipment from a reputable manufacturer. A lot of people are using the internet to buy something that is from China, from somewhere overseas. They've never even seen it before. And like you said, it shows up and it wasn't as described. So that's kind of the risk you run. If you guys are going to these big industry trade shows like IAPA in November every year, you have the opportunity to go scratch and sniff. You can see everything in person and see exactly how it's constructed before you purchase it. So I highly recommend that for anybody who's getting into the industry, or if you've been here for a while, but you've never been to the IAPA trade show. It's a huge, huge opportunity for you guys to not only see the equipment, but you can also meet the people who make it, the manufacturers, build relationships with those people. Doesn't matter what business you're in, relationships matter. So it's definitely a huge opportunity for you.
Good answer. Brett's going to talk to you about, I think, some of our ARA type customers, which is another big industry show. But last quickie, how much does a dunk tank typically increase your policy?
So there's no flat charge for a dunk tank. Usually they are going to see that as a riskier item. So just plan to pay more per 1,000 in sales on a dunk tank than you would, say, on a table or a chair. So, you know, that's probably the best answer. I would highly recommend that you get the units that have those plastic windows, you know, the clear windows on the fronts of them. Usually that's what the insurance companies are looking for. You know, they have
Mr. Easy Dunker, a little free advertising for those guys.
There you go. There you go. Those are the top ones that I typically are going to see.
Yep.
Mr. Easy Dunker or Easy Display. God, I can't remember which one it is. So yeah, those are the main ones. There's really no difference between the hard plastic one or the collapsible ones, as long as it has that clear window on the front. Obviously, that's just to tell if there's somebody in the tank, you didn't even notice it, and they're drowning. So just make sure that's one of the safety features that's included.
Okay. All right, cool. I'm going to kick it over to Brett. He's on the Zoom with us. And then I do see there's a few more in the comments, so we can come back to those if time permits. So Mr. Begley, go ahead, unmute, and we're ready for you.
Alex, great job. Thank you for joining us and partnering with us every year. We really greatly appreciate that. I just did want to catch one thing on the, you were talking about the higher claim items, knocker balls and the sumo wrestling. And did you talk about bungee run also? Did I miss that, or was that on your hit list?
I did not talk about the bungee runs, but yes, we have seen some claims on those. A lot of it had to do with the elastic bands, you know, just being really old, where they cracked, and then that's what caused the runner to get just slapped with the, you know, an extension cord. I mean, it's obviously very painful, but yeah, those are probably the worst of the claims that we've seen. A lot of it just has to do with the pain and suffering, and then you get a mom that see their kid has a giant bruise on them, and you know they're going to sue for that kind of stuff. So,
knocker ball, sumo wrestling, bungee run, joust, you're kind of one lawsuit away from being out of business.
Potentially, yep. At least when it comes to the insurance, because you know usually insurance is a big line item or a big expense for small business owners. So if you're going from paying $3,000 a year, and because you have an open claim on your record on the liability side, now the only company that will insure you is going to charge you $25,000 a year. That might put you out of business. So depending on how your cash flow is, or if you're able to kind of make it through the storm, like I said, it's a long process when it comes to a liability claim, and it's really going to depend on that reserve that they set on the claim. So as let's say you go a year into the claim, they say, oh, it wasn't as bad as we thought it was going to be. We're going to lower that reserve from 100,000. We'll take it down to 20,000. But they might have already had 20,000 in expenses just to investigate the claim. So now you're into it for 40,000 instead of it being 100,000. Looks a little bit better, but you're still going to end up paying a lot more money on the liability side because of that claim. And it's going to be on your record for 5 years. So not only that next year, but for the next 4 years after that.
Additionally, what if there's not enough coverage? I mean, how much insurance are they buying, and how much were you sued for? What happens there?
Yeah, so usually the industry standards for insurance is going to be at least $1 million per occurrence. You know, some states may require you to have more coverage. So, for example, Texas, if you have any type of mechanical devices, so a bungee trampoline, a rock wall, mechanical bull, you have to have $1.5 million per occurrence to operate in Texas. You can always buy more coverage. Just keep in mind that it's usually going to be centered around the per occurrence limit. That's usually what people are looking for. So I guess to your question, let's just say you get into a lawsuit with somebody and there might have been 3 or 4 kids that get injured on that one claim. They may say, okay, well, we determined that each kid needs to get $500,000. And, you know, maybe let's call it for easy math here, 3 kids. So 500,000 each per kid. So that's $1.5 million in cover, or $1.5 million in a claim that needs to get paid. Your standard policy only covers you for $1 million. So that $500,000 that's left over, that's got to come from somewhere. And so they're looking at you, the business owner, to pay that amount. So that could be the business killer that you're talking about that puts you guys out.
Certainly, you could be one insurance claim from being out of business. So Those of you listening, be careful on the items, and Alex, industry expert, so pay attention. That's some scary stuff. I wanted to switch gears and talk for a minute to our general rental audience, the brick and mortar rental stores that do customer pickup. And do you insure those companies? General rental, like a Taylor rental or a True Value rental, those type of stores that rent anything from a sewer snake to a popcorn machine to a party tent, maybe some rolling equipment, a bobcat, a small tractor backhoe, an excavator. Is that in your wheelhouse, or are you guys more? I know Brown and Brown's a huge company, and congratulations in your family. You guys have a great reputation, and I'm sure that's why they acquired you. Great job.
Appreciate that. Yeah, it was. They've been after my dad for a while trying to get his business, but yeah, it was definitely a big transition. To answer your question, yes, those types of rental companies are an option for us. I would say, to be completely honest, it's not our bread and butter. We really do specialize on the party equipment rental specifically, but we do have markets available that offer coverage if you have the general tool rentals, as well as the party equipment rentals. That is just kind of like an addition or an add-on to what you guys are doing. So it is available. Again, just full disclosure, just not typically what we do on a day in, day out basis. It's almost exclusively these party equipment rental guys.
So do you have any carriers that would offer a BOP policy to someone that has a small hardware rental business that,
Yeah,
$1
absolutely.
million type revenue? And
Absolutely.
so you do offer that. Okay, well, that's
Mhm.
good to know. And that would cover them, their building, their inventory, their furniture, fixtures, equipment, vehicles. You'll do an actual business owner's policy, a BOP policy for that.
Yeah, so I mean, it might be like a package policy. It could also be that we'd have to place the auto somewhere else. It's a very small strike zone when it comes to party equipment rental businesses getting auto coverage. There are very few markets that want to do it. So if you can get it as a package, that's definitely the best way to go. But if not, the general liability and the property portions in the inland marine as an add-on to that, those typically come as a package deal. So it might just be those two lines, then we have to go find a separate carrier just to write the auto. But it is doable. Usually the auto, since we are nationwide that we're writing in, some states are more difficult for us to get auto coverage just because we may not have an appointment with that particular carrier in the state. But if we know that they'll write, say, party equipment rentals, a company I like to use as examples, Progressive. We will always say, hey, I know Progressive will write this. I just don't have an appointment in your particular state. If you go online or if you call the Progressive line, they should be able to help you get a quote for a commercial auto. So we try to be facilitators on that. We're not trying to be like, oh, if we can't do it for you, then we're not even going to help you. We try to make it as easy as possible for you, the insured.
Gotcha. I know Brown and Brown has a huge amount of lines that they can access. I just didn't know.
Yeah. Oh yeah.
I
Brown and Brown's, again, like you said, it's a huge company. So if we can't get access to it, there's probably a Brown and Brown office in your state or in your city that we could refer that business to, and they should be able to help you on a local basis.
Gotcha. Well, Colleen, why don't you finish up with those other questions? Again, Alex, thank you for partnering up with us and joining us. Your presentation's just excellent, and people need to know what their options are. So thank you for taking the time to help us with this.
No, my pleasure. Thank you for having us.
Awesome. Thanks, guys. Thanks, boss. Alex, are there ways to get discounts on insurance for things such as safety training, etc.? That's from Daniel.
Yes, absolutely. So, already kind of touched on the rental software. That's an easy one. If you guys are looking to get a discount, get the rental software. The insurance companies give you those discounts for two reasons. One, remove that human error from the contracts being signed, because they have to sign the contract in order to check out and reserve the equipment. But then also the fact that it's tracking your sales makes the audit process much easier. The insurance companies don't want to go through a lot of headache on auditing these policies that are very, very small. So they really try to incentivize you guys getting the software, making it easy for both parties. So definitely recommend going that route. It's a very easy one that'll help you grow the business as well. But then also getting the SIOTO training. So that's SIOTO.org. They do an online certification class. I want to say there's 3 carriers that we work with, and even some of our competitors that offer a discount for that SIOTO certification. I believe you have to get it every year or biannually. I can't remember off the top of my head. But it's an online class. It shouldn't take you very long to get it done. But once you've completed it, you get a certificate showing what dates that it's good for. And then when you're applying for the insurance, you just make sure you attach that certificate, and they will give you a discount for it. I know within our programs, they give you a 10% discount on the GL. Same thing for the rental software, it's 10% discount. Other ways you can get discounts would be getting the watchdog sirens. The caveat with that one is that you must have a watchdog siren for every inflatable that you own in order to get the discount. So if you only have one watchdog siren, but you have 10 inflatables, you're not going to get the discount. So just keep that in mind if you guys are going to go that route. It's not as big of an impact. It's only a 5% discount for those, but it's still worth it, especially if you're in those states like Florida, New York, New Jersey, where having those discounts really is going to make a big difference for you.
Well, for anybody that doesn't know what it is, and unfortunately we don't sell them, but the watchdog siren is the thing that goes off if your blower stops so that you know immediately if your unit's going to start to deflate. So yeah, good answer. And then I think
states like New Jersey,
isolator,
even parts of Ontario right now that are following that. If you have if you're a ASTM compliant state and you have a landing height above a certain height, they're required under those state laws. So a lot of the things that you might read through on the ASTM laws and guidelines, which are recommendations, are actually very good practices to follow.
cool. Thank you, Mark. Last question. Last question. And this one, I already had a few of our local people jump in, but we have a customer who said, hi, hang on. Been in business for about 4 years. Local agency here in Buffalo, New York says that no company will cover bouncer units in New York State. Is this true? We know that it's not, but I'm just wondering if you have anything to add about that. And could you recommend somebody that would insure it? You guys would, right?
Yes. Yep. So Matt, I guess the answer to your question is that maybe your local agent does not know of any companies. So, he might not know about them, but there are companies out there that will cover people in New York State. It's just maybe something that's not in his wheelhouse. It's, to be honest with you, and to be fair, most of these agents don't know a whole lot about this industry. So you're going to get a lot of those answers. But, if you did a Google search, a lot of times you can find the answer yourself. Just type in bounce house insurance or inflatable insurance, and you should get to at least a few different options of some companies that would be able to do it for you. We also, as I would say it's a courtesy, but it's a way to help the local guys out, is if they don't have a market for it and they still want to represent you as their customer, they can get appointed to write that business through us. So we essentially just split the commission on that account, but you work directly with your local agent so that we have some continuity if they're already handling like your homeowner's insurance, your auto insurance. You could still go to your local guy. All of the correspondence will be through them. So I will kind of put that on the table, is that if we're splitting the commission, the expectation is that they're going to be doing all the work. So if you guys are calling us directly, we're gonna just send all that correspondence back to your local agent, say, hey, your customer has questions, you need to be answering them. So kind of adds another layer of somebody in between you and your insurance company. But if that's what makes you more comfortable, then that is an option for you. We've had a few people that worked through a local agent and they just didn't like that they basically asked them a question and they would just ask us the question right after that. So it goes both ways. But again, if you feel more comfortable working with a local person than us directly, that is an option for you.
Awesome, Alex, thank you. And then I think you said they're probably all created equal, or at least, you know, it depends on your needs, but do you recommend one software over another?
I don't really have a dog in this fight because I don't have a rental business, so I don't know, you know, which one is better for certain things. I know, you know, ERS is touted as the number one in the industry. Inflatable Office, they have. I would say it's a really good thing for the smaller guys. You know, so if you had, I think, fewer than 10 unique items, it's free to use. So if you're just trying to kick the tires on it, see if you even want the rental software, you know, it's a very low barrier way of kind of testing it out. You know, Bouncy Castle Network, they're fairly new in the States, but they're very popular, I would say, on a worldwide basis. They've done a really good job of giving you just out of the box templates on the website. I want to say they do a really good job with the marketing side of things as well. So, you know, those three, though, I'd highly recommend checking out all three of them. You know, some of the features may be great on one platform and not great on the other. I'm probably not the best person to ask because I don't use it day in, day out. But from what I've heard, those three are definitely the ones you want to start with. Outside of those three, I really don't even know who else to recommend.
Those are the big three that I know too. If you ask around in the groups, Daniel, if you're in Pro or Party Rental Knowledge or any of those groups, people will give you their wholehearted recommendations on which one is the best. But yeah, as far as we know, again, we don't use any of them either, so I can't speak on it, but they're all three super reputable.
And even was it's Mark again, Alex, as you were explaining earlier, you know, you're not an attorney, I'm not an attorney, but I know that, you know, every state's going to be different is what their laws are. And, you know, even with an online service, having your rental contract vetted by your legal counsel is so important. I know in our rental company, it gets looked at every year. It might get revised every couple of years. And over the years, it's cost us a lot of money, but you know, that is the one thing that, you know, we're having everybody in our rental department, you know, look at, read, review, initial, sign, and it can't be boilerplate for everybody.
All right, thanks again, Slater. So yeah, guys, we're past 4:30. Alex, if there's something you want to say to wrap up, that's awesome. Guys, this video will be available, you know, to rewatch. Certainly, if you drop more questions in the comments on the rewatch, we will do our best to get them answered for you. If you're not already in the virtual trade show group, definitely, or not the group, but the event, definitely join the event and get notified about all the other speakers. And we thank you all for watching, and we thank you especially, Alex, for presenting.
I really appreciate it. And I guess one final parting thought, I can't stress this enough, guys, on the audits. You know, if you guys are thinking that you're going to just blow it out of the water, if you already did blow it out of the water in 2021, make sure you guys are setting some money aside for the audit payments. I don't want that to sneak up on you guys. You're not prepared for it. So just, you know, if you did really well, just be anticipating that you guys are going to have an audit to pay as well. So it's a good problem to have. Usually means that you did much better than expected, but you know, and like I said, in years past, people weren't prepared for it, but that is going to be par for the course moving forward.